Welcome, everybody, to another Tactical Tuesday. Tonight, we are going to be talking about the other side of things than what we normally talk about. So, if you've been joining us on our Tactical Tuesdays over the last several years, we talk a lot about being the working partner in a JV relationship. We talk about raising capital. We talk about all those sorts of things, building credibility, you name it. Tonight's kind of like the other side of the story. And this is for the money partners out there. And I know there's a lot of you out there that want to invest in real estate, but maybe don't want to do the work involved in investing in real estate, don't want to deal with the tenants, don't want to have to find the properties, don't want to have to evaluate every number in the equation. And so tonight we're going to be I'm going to be sharing my experience. We're going to bring on another money partner, not one of our money partners, but somebody that has partnered with actually several different opportunities. And what allowed them to move forward? What made them feel comfortable, or her comfortable, moving forward? And so we're going to talk about that tonight. We're going to bring on Maggie Clark, one of our OGs, one of our original gangsters in the Ignited program. And so I'm excited to bring her on in just a couple minutes. So as you guys come on, say hello, let us know where you're from. It's going to be a fun night tonight. And we're hopefully going to shed a little bit of the other side of the equation. And so for those of you that are the working partner side of the equation, you can learn a lot from this, because what are they looking for? How do you market yourself? How do you build your credibility? It all ties in here, guys. And so that's why we're doing this tonight. And for those of you that maybe are thinking of being a money partner, what things should you look for? What should make you feel comfortable moving forward with an investment? Because there's sometimes lots of money involved. There's risk involved in partnering with anybody. So tonight we're going to talk about kind of both sides of the equation, but from the money partner perspective. So a little different than normal. Thanks everybody for saying hello as you come on. We see people from all across Canada. We're going to do our intro as normal. So we'll see you in a second.
Hey guys, it's Corey and Tiffany, and we're the co-founders of Investor Life.
And we help investors scale their portfolios using other people's money. Fearless, welcome to another Tactical Tuesday.
Welcome to another Tactical Tuesday. We have a really cool topic that we're going to be talking about tonight. This, guys, I hope is a scenario that shows you the power of leveraging your money.
We help investors take their portfolios from 2 or 3, 5 properties maybe, up to 15, 20, 50 properties if that's what they're wanting to.
Really, the sky's the limit. And we help investors scale their portfolio.
For free weekly live trainings that we do over there on Facebook. Thanks for...
Hey guys, it's Corey from Investor Life, and Tiffany just stuck out her tongue at me. Okay.
Yeah, that was a bad rendition. But guys, today, what wrecks people in real estate? We're going to be talking about that, and we're going to make sure that it doesn't happen to you. Welcome back, everybody. Thanks for saying hello as you come on. We have people from all across the country. I saw Panorama more than once. I saw Toronto, Canmore, Bolton, Halifax, Cape Breton, Edmonton, Oshawa, Fort Saskatchewan. So all across the country. And our guest today is from Vancouver Island. So guys, we're covering the entire country of Canada tonight. And we're talking about something that I think is going to give everybody a little bit of insight. When it comes to raising capital, what does a money partner look for? What actually is the tipping point between them maybe saying, you know what, I'm going to choose another opportunity, or yeah, you know what, this is one that I'm going to invest in. So we're going to be sharing a few insights into that. And so for those of you that are maybe raising capital, for those of you that have opportunities, for those of you that are looking for a money partner, use tonight as a bit of a learning experience as to what you need to be offering, how you need to build your credibility, whatever the case might be. So, we got a couple Panorama. We have Windermere, BC as well, which is not too far from Panorama. So welcome everybody to our show tonight. Okay, so let's get started. Let's get right into this. We're going to invite up Maggie Clark, and Maggie is welcome, Maggie. First of all,
hi, Corey. Thanks for having me.
Absolutely happy to have you. And Maggie, you were in our first ever group of Ignited members way back in August of 2019. It's been a long time.
I was.
All right. Well, we're happy to have you here. We're happy to have you. And so, Maggie, let's just get started from the very beginning here. Obviously, you have been investing in several different ways. We talked about that just a few minutes ago. My first question for you, though, and this is the thing, when you go in to put in thousands of dollars or tens of thousands or hundreds of thousands, whatever it might be, into an investment, you need to do a little bit of research. You need to feel comfortable, right? First of all, why did you decide to invest passively, like as a money partner, instead of you going out and maybe buying property and taking care of the tenants and all of that sort of stuff? Why did you decide to be a money partner in the equation?
I had a couple of reasons. First of all, our market's really expensive. So to buy something more than my primary residence was a bit of a challenge. And so I was able to do a refinance out and of my primary residence. And I wanted to also be a working partner. And I thought one of the best ways to know about borrowing money was also to lend. And so I chose to look at the opportunities for lending first because I had the ability to do that. So, Okay, let's stop there because that's a really big point. And I think that can probably help a lot of people listening to this because, the fact that, okay, you want to be a working partner, but you had the ability to be a money partner first. And so investing as a money partner kind of helped you to learn the process of, okay, if I'm going to be the working partner, what do I have to offer a money partner? And so it helped you learn through that process, correct? Yes. Yeah, yes. It really did. So,
okay.
And I felt that the first person that I partnered with on a GPLP deal was incredibly well laid out and papered and right. And so if you haven't seen that sort of thing before, it was like, oh, this is great, right? To start to understand the processes, right?
Absolutely.
So
it's and we tell this to people getting started all the time. If you have the ability to be a money partner first, you're going to obviously learn the ropes. You're going to learn the process. You're going to learn how, that person kind of taught you how to build the confidence, that sort of thing. And then you're able to go out and do it on your own. So great way to get started. We call that the learning JV. And so that's awesome. Okay. Next question I have for you, Maggie. What were the top reasons? Now, thinking back, okay, your first instance was a GPLP situation. What were the top reasons that actually allowed you to move forward? What made you feel comfortable in making that investment?
So I had it set in my mind that I was going to use real estate as a tool, right, to buffer my retirement income and move forward. So the person that I met came to me through a highly vetted real estate organization and was representing them, right? Okay. And I thought, okay, they're not going to be choosing flighty people. Okay. Also, when I was speaking with her, right, that really strong gut feeling, like my thoughts align with this. And then the other piece was it was an apartment building in my neighborhood that I knew, like, we were one of the fastest growing areas in Canada. It had already progressed to they had development permits, right? So and I knew the local builder, right? So it was I don't know if that's doing your homework, your background, but for me, it was just this. It was that feeling that this adds value, and it aligned with my core value of, you know, increasing housing in my home neighborhood.
Okay.
So,
And you had some comfortability. Okay, so let's just
mhm,
kind of talk about those few steps that you just mentioned. Number one, they were vetted by a larger organization. So
yeah,
somebody had, let's call it credibility
yeah,
built in. Okay. You also spoke with this person, this lady,
mhm,
and in speaking with her, I'm sure she built up your confidence instead of taking it down. Right. So obviously she could
completely.
speak what she was trying to do, and that appealed to you.
Yeah.
And then it was local. You kind of knew some of the people. So overall, would you say, okay, I had a question for you. If you were to rank this, was it the person? Was it the numbers? Was it the particular type of property? Or was it the market? So 4 different options there. If you were to pick one that really set you over the bar, what would it have been? Or is it all of them combined?
No, it might be market and person, and they're really close, only because I had already been looking at our home market going, how can I participate
Mhm,
in increasing the housing here, right,
mhm.
for our young people, and and whatnot. But then met this person with a project that was like, okay, this really aligns with my values.
Okay. Okay, good to know. So, for those that are listening, first of all, if you have any questions as we go through tonight, throw them in the chat, and we will do our best to answer them. But this is a good point because it was kind of 50-50 for you there. It was the
It
market. You had
was,
some
yeah,
comfortability with it, but it was also the person. You had some comfortability there. And so those two, and it's interesting because I think a lot of people, when they are trying to present an opportunity, focus on the property, maybe focus on the numbers and say, oh, X amount of cash flow or X amount of ROI. But from what I'm hearing from you, it had not that it had nothing to do with that. Obviously, that's important, but far more important than that was the person you were talking to and investing with and the market that property was in.
yeah.
Okay. Okay. So here's something for everybody that's listening. Don't focus on the numbers. Don't focus on the cash flow. Don't focus on the ROI. In this particular case, and I mean, we're just talking about this first example, right? And you've invested as a money partner in several different areas, Maggie. But in this first example that we're talking about, which was on Vancouver Island in the Victoria area, that's what was important there. Now, you've done this more than once, right? Like you've invested as a money partner more than once. Let's move on to your second example. And it was a rent-to-own type of experience.
Right.
In that particular one, was it the person? Let's think back here. Was it the person, the numbers, the property itself, or the market that it was in?
Okay, well, it wasn't the market,
Okay.
although the market made it doable.
Okay.
Right, because and actually it was funny because that one actually goes against my grain. I really don't. I always thought anything that I invest in, I have to be thinking I might end up owning that, and I
Okay.
really don't want to own that property.
Okay.
So I would guess that it was a person vetted through Ignited that
Okay.
was a professional, right, in
Okay.
presenting the rent to own, right, and had a positive track record with that.
Okay.
So,
Okay.
and when it was presented to me, it was presented in a professional manner.
Yeah.
That, and I liked not only how she vetted the person coming in as the money partner, but the people. She had quite a large process of vetting people for
Mhm.
that were going to do the rent to owns, and a
Mhm.
good track record of completion, which isn't everybody's. Not everybody does it that way, and so
Yeah.
that was important to me, that the people would end up owning the home.
Okay. Okay.
So
Okay. So second situation here, it was the person was number one. So in
yeah,
both scenarios, the person was a large involvement
it
in
was
your
huge.
okay.
Absolutely.
And so let's just focus on that before we move on to some of the other questions that we have. But like, what is it about somebody that gives you confidence? What is it about? So think about both of your instances that we've talked about so far. What was it about both of those people that gives you that confidence to say, yes, I'm in, I'm going to write that check, or I'm going to qualify for that mortgage, or whatever it is? What is it about those people that gives you that confidence?
I think for me, okay, so I'm maybe a bit on the slow and steady side.
Mm-hmm. Mm-hmm.
Um, and so it definitely was, they had some track record
Okay.
behind them. I like, I haven't said it so much. I did look at the deals, right? And I
Mhm.
weighed, right? You have to be always prepared for what happens if this doesn't come to fruition, right?
Mhm.
I have to be able to carry this mortgage and this property, right?
Mhm.
Now that, I mean, it's still the idea that it would go, this particular one would go back into the pool and find somebody else, but hopefully, very shortly, this particular one will finish.
Yeah.
In the previous one, with the GPLP build, um, and it was my first time, I limited my amount of investment. I
Yeah.
wish I hadn't, because the returns were phenomenal.
Okay.
But yeah, so yeah, but that was my first time. I looked at it and I thought, okay, I am prepared to lose this amount of money if this doesn't go well, right? If everything, I wouldn't do my last dollar on a,
Yeah.
on a first time round, right?
Yeah.
And yeah, I looked at it that way. So
Okay. Okay. All right. Good answers. So, okay. So you're presented an opportunity. Let's say somebody was to come to you, Maggie, and say, hey, I got a really good opportunity. How much diligence, like, did you do before you invested? Like, did you spend 8 hours, 50 hours, 300 hours doing diligence on this person, on the opportunity, on the property, the market? Like, what would you say was the level of diligence you did? Enough? Maybe you should have done more. Maybe you did too much. I mean, what's your opinion?
the first time I jumped,
Okay.
right? I
Okay.
Maybe because I knew exactly, right? The first one, the project was 3 blocks from the first house that I had ever owned, right?
Okay.
So other than them, like, how do you find out that somebody's truly a crook, right? That you would almost have to go down that, right? I did not Google research. I just felt comfortable,
Yeah.
right? That everything else on that aligned, that it was going to be a positive
Yeah.
outturn. And it wasn't a hard sell, right?
Okay.
It was presented as an opportunity, right?
Mhm.
This is what we've got. Um, and so I went forward with that. The second one, the person was an Ignited member along with myself, and so I had seen them present, looked at some of their things, but when we were in contact, and I just felt that the way that it was laid out,
Mhm.
right, really worked.
Okay.
And then the
Okay.
same thing, I looked at, okay, the risk on this is that I end up owning a house
Mhm.
that, somewhere that I don't particularly want, but
Yeah.
um but that would be well, the other thing would, it actually really, I didn't like the idea that, right, if the people default, they lose their, because they put a component. They actually had some buy-in to it too, so it would hurt them. But yeah, so and just
Okay.
once again, yeah, it felt it was it was manageable for me. So
Yeah. Okay. So before we go any farther, because some people on here might not know a little bit about your background, but maybe just tell us a little bit. What did you do for most of your working life?
I worked as an EA in the school district,
Mm-hmm.
and I am a long-term foster parent
Okay.
for 35 years. So I have the same young man that I've raised since he was a baby, and I have a contract for that. So,
Okay. And what's an EA?
oh, I was an education assistant at the high school level.
Okay.
So I did taught math and science to kids with learning disabilities.
Okay. Awesome. So this is really good information. And one of the things that I caught from what you were saying there was that, especially in the first instance, when you just jumped in, it wasn't a hard sell. They weren't trying to make a hard sell on you. So for those of you that are listening, and maybe you're a working partner, or you're trying to present an opportunity, or you're trying to, let's call it, entice a money partner to listen to your opportunity. If it's a hard sell, then that's probably not going to work. And as Maggie mentioned, they were presenting this great opportunity. And at the end of the day, she wishes she put more money in because the returns were really great. But it was an opportunity. And that's the thing about it, is if we are presenting an opportunity to somebody that they couldn't otherwise get on their own, then we don't need to make a hard sell. And so I thought that was a really good point as well, Maggie. So, okay. Did you meet both of your working partners in person first? Like in person, did you meet them in person before you invested with them?
The first one I did.
Okay.
I met her at an event, even though it was across the country. We actually were both from Victoria.
Okay.
So the other person I didn't meet for ages.
Okay.
So
All right. So there's another interesting point, guys, is, sometimes, here we have an example of Maggie investing with somebody that she had never met in person. And I'm going to say that, for us, when we were doing our investing, there were several of our JV partners that maybe only one of me or Tiffany had met, and they hadn't met the other of me or Tiffany. And so, but it's about building that confidence. And obviously, Maggie, you've mentioned it a few times here that in both cases, the person was somewhat vetted. And had, like in the first example, they were vetted by an organization. In the second example, they were vetted. They were an Ignited member. So you built up some confidence there. And so that there's another key, guys, when you're thinking about this is, what groups are you a part of? Those things can be a factor in raising capital. Is, if you can say, for example, I'm an Ignited member, and you're active within the Ignited community, that is going to build up some of your credibility. People are going to get to know you better. You're going to build more relationships, and there's a ton of value as a money partner for Maggie and as working partners as well. So, yeah, awesome. Okay. Let's go to okay. In both cases, how was your experience? Like, as a money partner, would you say that it was 100% hands off? Would you say that you did put some time and effort in as a money partner, or like how much time and effort did each of these different scenarios cost you?
the first one, absolutely nothing.
Okay.
The second one, I forward a few bank statements occasionally
Okay.
so that they can, right, because there's yearly paperwork to be
Yeah.
done.
Okay. But
And
you're
then
not dealing with the tenants. You're not dealing with or the
no,
rent to own buyers. Have you met the rent to own buyers?
no, I have
Okay.
not.
Did you vet them or did you leave that in the hands of your working partner?
No, the working partner had a process.
Okay.
So, and I felt strongly that the process that she was presenting, um, was going to work, was going to make it successful, not just for me, but for that party that
Yeah.
was purchasing the house.
Okay. Okay. So I think there's another key there, just another side point to all of this, guys, is that, if you are the money partner in both of these cases for Maggie, you had very little involvement in the process, right? You trusted, and that's probably, correct me if I'm wrong, but the reason you invested in these scenarios is because it was hands off and you didn't have to do all of that work, or you didn't have to come up with a process yourself. Would I be correct in saying that?
Yeah, absolutely. Like, I really would like to step into being the working partner. And at this point, we were looking at doing something. But for us, that, I knew when I started with Ignited that my life was too busy, right? And I knew, okay, I wanted to start to meet people that were in the real estate field, do the networking, see what different things that people were doing, even though I had sort of followed it and I follow our local real estate. I mean, you really have no idea what all the other local opportunities are across the country, right? And the people that are representing them. So there was that. Both of those lending opportunities I felt were fairly safe. I did another that in the end I didn't feel as comfortable with.
Okay.
I did when I originally did it.
Mm-hmm.
So the last one that I did was I lent on a promissory note.
Okay.
To another Ignited member and I knew that actually was their process.
Okay.
That, so they had been quite successful, and I'd seen them build up a portfolio, but then they partnered with somebody else and they were purchasing for cash and so raising the money with promissory notes. And the piece of it that really worked for me on that one was that there was the opportunity to recall the money within a month.
Okay.
And when I did choose to do that, it was returned to me promptly.
Okay.
For myself, I don't know, because that wasn't as much backed by a paper deal and a property that it was held against, didn't feel as comfortable for me.
Yeah.
I also had done a larger sum of money. And so it felt a little bit uncomfortable. And so didn't choose to leave that out. Now, that's not to say I got my interest payment monthly, paid on time. There was never a problem that way. But and I
well,
but it was just, it felt riskier to me.
Yeah, and the fact is, it is more risky, right? Like if you're lending on a promissory note versus being a money partner with an actual equity position in a property, or investing in an LPGP scenario, a promissory note is obviously less security. So you did it, you tried it, it didn't feel good, you got out. And you know what, those are the experiences that we go through as investors and doing all of this stuff, right? So interesting that, like, these are it was more the security side of things that made you feel more uncomfortable with the third scenario, correct?
It was.
Yeah.
It was. And I think at that time too, I could see that the real estate was starting to do a bit of a strange ride. I think we were entering COVID,
Okay.
and I was like, I think that there could be some instability, right?
Yeah.
And I didn't feel that I wanted to ride out that instability, right? I had some other plans for that money. Like, of course, every time you invest, right, you're putting that at risk. But I truly felt that we were doing a big family project, and I wanted to have access to those funds for that. And so I just made the request for return, and it, received that in good order.
Yeah.
So
Awesome. Good. So in the end, it worked out okay.
yeah, absolutely. It did work out. It was just, it was a personal, right? Right feeling for me.
Yeah.
So
Okay, good. This might tie in with your last response, but if you were to do something differently, what is one thing you do differently if you did it again? If you were to invest as a money partner in a scenario, what is one thing you might do differently? Is there anything that comes to mind?
So the first one I felt really strongly about because I knew the market, right? So they would have had to be really doing a really poor job at what they were doing because our market was growing so much, right? The second one, I truly felt strongly about the person because of the time that we had spent in Ignited together, right? And I really felt that she was representing what she did in a good manner and herself. And then, and both of those deals were well papered. I think that is the one thing that I would do a little further. I would look at the paperwork a little more closely than I did, right? Like I committed before I saw the paperwork for the GPLP, right?
Okay.
And the second one I did and felt more I saw the paperwork, right? So, and then I think that was maybe why I didn't feel as comfortable with the third one, was that it wasn't backed by property, right? Or wasn't backed by property that I had any rights to. So it was, I personally have always felt that owning land, there is some really strong value in owning land, right? And so that to me is, I think if it was right, I'd want to know where that piece of land is, and I might be looking, I'm looking at a combination of the land and the partner.
Okay.
Yeah.
Okay. Good to know. And that's really, you've kind of echoed that throughout this entire interview so far, is market and person. Although you invested in a market that you weren't that comfortable with because the person was strong, I think that those two things kind of tie in quite well together, is as maybe the top two things. And the funny thing is, I think, is that when a lot of working partners present an opportunity, I think they focus probably 60-70% of their time on the property. They focus on the property and the numbers from the property, potential numbers from the property. And they probably focus a little bit less on themselves, their track record, building their credibility, and probably a little bit less on the market and the fundamentals in that market and the reason why that market is strong. And so I think that this is a good discussion to have in front of other people, Maggie, is that, when you look from the perspective of somebody that has invested and is investing, it's good to know what you're looking for. And, you know, I think I echo, I mean, we've invested as money partner on several opportunities, and I think I echo the same thing. It has come down to the person. I would say the person in most cases was number one, but the market was probably number two. And in a lot of cases, guys, the property and the numbers really didn't have a whole lot to do with it. So so focus on that. There's our little plug for our working partners out there to what to focus on when it comes to sharing an opportunity. Okay, so Maggie, is there anything else that you want to close with? We've kind of covered all the questions that we were going to go through tonight. Is there any other advice that you might give to somebody that is thinking of being a money partner, thinking of investing funds in an opportunity? Any other advice that you might give to them?
I think I would, okay, this is a fault of my own, but I would reach out to more people and speak with them, right?
Okay.
And see what they're doing. And the other piece is, I think I would probably align myself with different real estate groups that you feel are viable and legitimate.
Okay.
Right.
Good advice.
I have to say, like, I think there's as much to be learned too from the people that you think are a little bit flighty and right. There are people that I've seen that's like, okay, that doesn't sit well with me. And for me, it was a learning curve, right, about joint venturing with other people. And because I didn't really come from a business background. So but I think that that's just as important, right? To look at, okay, this looks like, you know, really positive, and that some people, what they're presenting is all over the map, right? I mean, a huge one for me, like, I really wanted to be a working partner, but I had to assess that I was too busy when I started, and I really didn't feel strongly enough, like I needed to do it closer to home. And our market here is really expensive. So it's really hard to look at for me, it was really difficult to put myself forward at the beginning when the ask would be huge, right?
Really,
and to put together a large-ish project. So the dream hasn't died, right? But it's evolved. Right. People want to come to this island. And so, you know, we're still looking at doing something. But yeah, it's definitely, I wanted to have enough background information, I felt like, to put together something that worked. Okay.
Well, good for you. And you've been working hard on this, and you got some stuff going on, I know. You're farther ahead in your journey than you were a few years ago, right? And that's the whole thing with this, is if we're always progressing in our journey and getting a little closer to our end goal, that's what this is all about. So
it is.
Congrats on doing that, Maggie, and putting the work in. And we love having you in our Ignited program, and one of our OGs, and you're there, and you can give some of this advice to some of the other ones that are maybe just joining or just getting started or don't know quite what to do yet. I think that there's a lot of good points that came out of this interview tonight. So thank you very much, Maggie.
Okay. Thanks, Corey.
Okay. All right, guys. There we go. I hope that you picked out a few points out of our Tactical Tuesday this week. I'm going to run through some of the highlights for me. Okay. And these are kind of some of the things that if you are a money partner, maybe think about. And if you are a working partner, focus on. These are the things that are important for those that are investing their hard-earned dollars in an investment. Number one, focus on yourself. What do you bring to the deal? What is the credibility you have? Are you part of a group? Are you part of a mentorship program? Are you part of a coaching program? Are you being coached by somebody reputable? All of those things in both scenarios here for Maggie, in all three scenarios, had something to do with it. Do you have a track record? If you don't have a track record, it could still be done. But once you start building that track record, that's when the momentum really starts to happen, guys. So building up that track record can be an important thing as well. Remember, Maggie said it wasn't a hard sell. That's very important. Remember, when we're trying to raise capital, bring on a money partner, whatever the case might be, don't try to sell something to somebody. What you're doing instead is presenting an opportunity to somebody. And remember, Maggie said in the first case scenario there of her first investment, she wished she'd put more money in. It was an opportunity to make money. And that's really what it should be if we're doing our job properly as a working partner. And then, you know, our money partners are going to look at our paperwork correctly. Are we doing it right? Are we writing up things correctly? Is our JV agreement done up properly? Are we using the lawyer to do things properly? These are types of things that, you know, they want to feel confident. They want to have a good gut feel in the whole scenario. And so us as working partners need to make sure that our money partners have a good gut feeling when it comes to their investment. And what helps them continue to have a good gut feeling is good communication throughout the way. From beginning throughout the process, we need to communicate with our money partners to make sure that they continue to have that good gut feel. Okay, so there's some good points that we learned tonight, guys. Hopefully that helped you when it comes to raising capital, or for some of you out there, if you are a money partner and you're looking to invest, some of the things that you need to think about. Do you have that good gut feel? Do you know the person properly? Do they have a credibility? Have they built their credibility? These are all things that are important. So guys, before we close off tonight, I wanted to just let you know that we do have another upcoming boot camp, and we are doing it on May 10th to 13th. So it's coming up pretty quick. It'll be here in less than 2 months. And Jules will share a link where you can join up. We have our early bird on. It's half price, 50% off, just like we did last time. So if you missed our last boot camp, we had a ton of fun, and there was a lot of really good information that was shared. This one is going to be the same. We have different speakers, though, in this upcoming one in May. So we're excited to announce May 10, 11, and 13 is our upcoming boot camp. 50% off. You can get it for as low as $97 right now. That early bird price does end, and then it goes up from there. So guys, if you're planning, if you want to join, you want to learn how to raise capital, whether that is being a working partner, or whether that is raising capital through private lending, whatever it might be, that's what this boot camp is all about. Okay, and we'll be giving away an Ignited scholarship as well at this boot camp, like we do every single boot camp. So we're excited to do that too. So join us at our next one, May 10 to 13. That's it for tonight, guys. We will leave you at that. I hope you got some good points, and we will see all of our Ignited members over in our laser session on Zoom here in about 15 minutes, about the top of the hour, depending on what part of the country you're from. We'll see you there, and take care, guys. Have a great night, and we'll see you next Tuesday.